Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be taking a look at the various different exahash targets and growth targets of these Bitcoin miners that we cover on the channel. It's become very evident that the market is valuing overall growth and capacity in terms of exahash, and nowhere was this more obvious than with IREN earnings and the big ATM and 30 exahash announcement from last week. Now we've got a lot to go through, a lot of charts and tables to really compare and contrast some of these miners. Before we get into that though, please take a second, smash the like button, you guys. It's 100% free to do. It takes literally 1 second of your time. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below which of these miners you think are most likely to achieve their exahash growth goals this year, which of them you think maybe won't, and your outlook for 2024 in terms of the sector as a whole. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we wanted to switch it up a little bit and talk about the growth targets we're seeing in the Bitcoin mining sector. Obviously, this became very evident last week when we had IREN report earnings. They came out with a huge $500 million ATM. They also announced the expansion up to 30 exahash. And this is when the market really woke up to IREN, Anthony. You and I were both discussing this. It appears that the market is really valuing overall exahash capacity and growth at this point in terms of the Bitcoin mining sector, eh?
Absolutely, and more so in terms of growth than in terms of HODL. We're not seeing that HODL given as much recognition to some of the miners that have got, I'd say, reasonable stacks. I mean, you know, Hut 8 have got a 9,000 coins at the last count, over 9,000 coins, and that's pretty much, you know, not far short where their market capitalization was the other day. Hive Digital, another company with nearly 2,400 coins, they're operating at literally book value. So, you know, there's a premium given to the likes of Marathon Digital, the likes of CleanSpark, the likes of Cipher as well have been given a premium. But those first two there, in terms of hash rate, you can sort of understand why the market's looking at those there. And then we've got a whole bunch of miners this year who are looking to expand significantly and get to some really high hash rates. I mean, you know, the growth in the last few years is significant. And just to put context into the growth, if you look at the sort of the miners that I cover in the table between now and December, at the moment, with what we've seen in publicly announced updates, there's going to be 105 exahash added to the global hash rate just from those 15 miners.
It's
and
incredible,
that's only half the publicly listed miners in North America. Obviously, some of the biggest ones are in there, but that's just giving you, you know, I think the US has got something like 35% of the mining network at the moment, and that 30% is going to grow the mining network probably by about 20% of where it is at the moment.
Yeah, I'm glad you brought that up. You mentioned it yesterday as well, because we're going to talk about network difficulty, overall global hash rate here before we get into the company specific growth targets. But you brought up a point yesterday, Anthony. I always think of difficulty in relation to hash price and the price of Bitcoin. As that goes down, more and more rigs will come off the network. But you brought up a great point that for these publicly traded miners, they've already got these equipment purchase orders in place. They're essentially plugging these in as fast as they get them, regardless of the Bitcoin price. I doubt the Bitcoin price has anything to do with the plug-in schedule. So we're going to see a tremendous amount of hash rate. Like you say, Anthony, 105 just from half of the publicly traded, not to mention the private miners, just as part of these regular planned upgrades. So with that being said, the next table we wanted to look at here to kind of intro everything is the Bitcoin difficulty adjustment. Now, Anthony, interestingly enough, we're scheduled to go up 16.5%. Maybe let the viewers know why it may not be quite this bad, but still quite a head scratcher based on what we thought we were going to see prior to having.
Yeah, so basically, if we go back, you know, 4 or 5 months, even towards the end of 2023, when a lot of these big company and a lot of analysts in the space were saying that, you know, when the halving occurs, the Bitcoin rewards go down, and therefore when you're only getting half the revenue and you're paying the same amount effectively for your costs, you're going to have to switch off the less efficient miners. So there was a, there's method in the madness. It feels like it's, something like easy to understand. So, even some of these big firms, the Cantors, the JP Morgans, were coming out and stating 25-30% was going to come off the network. And when the halving occurred, the network went up by 2%, the difficulty, the following difficulty, which was a few days after. Now we had that spike in transaction fee, so that probably helped the or aided to that difficulty increase. And bear in mind, when you're getting an influx of transaction fees, effectively paying you more rewards than you were getting pre-halving, significantly more rewards, nearly 8% more rewards than the day before halving. That gives you an indication that a lot of unprofitable miners or inefficient miners were getting plugged back in to try and to scoop up some profits, because it's just literally a plug and play. You can switch these machines on, they can be earning, you can switch them off, they stop earning. So it's not like there's a major process involved. These sites we talk about, these big sites like the Rockdale site, like Dalton site, like some of the big core scientific sites, they take less than a minute to switch down and switch up when they have to curtail energy. It's that quick. It's push of the button. It really is. No other manufacturing industry can work at that sort of pace. You couldn't get Elon Musk switching off his car manufacturing plant in 60 seconds in Texas or where they're producing batteries. It just couldn't happen. All these big smelter companies, they take days to get the temperatures down to what they needed to be. But Bitcoin miners, the great custodians that they are and the great supports of the network, they can switch on and switch off as demand allows them to. So when there's an excess of energy available, these miners go in there and they can utilize that energy. And when the domestic demand rises, or there is a requirement for curtailment, then the miners will switch off, and they play the good social responsible customers that they are to the network. And so when that difficulty didn't just as everyone expected, you then start to think, how long are these transaction fees gonna stay around for? And unfortunately it lasted about 2 or 3 days, and then we saw the drop in the fees. The hash price starting to get closer to 50 which is where it was expected to be. There was no challenge from that number. And then we saw the next difficulty, a drop of 6%. So again, nowhere near what people were expecting. So the difficulty changed this week, and it actually went up by 1 or 2%, again, because it looks like more hash rate on the network. So yes, there are a number of more efficient miners available in the market, but it takes a lot of emphasis to get the difficulty increased. And bear in mind, difficulty now will be the same now for the next 10, 11 days. And at the moment, it's saying it's going to increase by 16.5%. Now we know that there'll be some normalization of that number as we get closer to the date. But that's a sort of like a stark reality, is that the miners have been globally, not just in North America, have been plugging back in and trying to scoop up some of these potential profits. If they've got access to low price energy, they can probably use less efficient miners. They can probably, as we've seen Core Scientific articulate. So we had Adam on the podcast a couple of weeks ago, and he gave us an insight into what Core Scientific are doing. Now they've replaced a significant amount of their miners this year. So all those S21s that have been coming in have been replacing some of the older machines. And naturally you just think, well, they'll get rid of those old machines. No. Adam said, no, we had them stored away, and we actually started putting them into other facilities because we were able to start underclocking those machines and reducing the cost of power to mine. So you're getting, again, a contribution. And it's all about, does the mining bring in a contribution towards overheads? And so what I mean by contribution is accounting terminology. If you can cover your energy costs and more, then that more is a contribution to overheads. So it makes sense to actually, if you're not going to totally stop mining because it's the end of the road for you, it makes sense to keep the machines on because they're given a contribution. If you mine, it will help pay some of your overheads. Once the cost of mining, and that's the energy cost, gets more expensive than what you're receiving in revenue, you have to switch off. If you don't switch off, you're effectively gambling then on hopefully the price of Bitcoin going higher in the future to then claw back some of the profits that or to cover some of the losses that you're making, physical losses that you're making from a margin perspective. So when we say, gross margin is revenue that you mine from Bitcoin less your energy cost. That's the gross margin. Then you have the operating cost, which are your salaries, which are your travel and subsistence, G&A costs, professional fees, interest expenses for those miners who've got loans, and equally interest paid for those miners who've got significant balances. So when we talk about the likes of Riot and Marathon, who've got like $300-400 million in the bank, they're actually getting interest on that money in the bank there. So that can offset any loans that they may have. So Marathon have a loan at the moment. It's in the form of notes. So there's a percentage against that. I think it's 1%. So not a significant amount, but probably in the region of $3 to $4 million a year in interest payments. And if they've got 500 million in the bank and it's earning 2%, that could bring in 10 million in interest paid. So there'll be a net off effect for the year there of interest going out and interest coming into that company. So equally though, is from an organizational point of view, you want to make sure that you're utilizing all your assets as well as you can be. It's no use just keeping money in the bank earning 2% because inflation across the globe at the moment isn't at 2%, and therefore you're losing the value of that money. So if you're not spending it, you shouldn't be sort of like raising cash at the moment. You should be sort of like managing your position financially, through the cash flow statement. But I can see why the likes of Riot have to have it for another reason. They've got some big PPA agreements for their energy pricing, and having a PPA agreement means you've got to have the cash in the bank should anything go wrong, and you get like effectively like margin called on your electricity. So there's a reason for some of them having that big. But Marathon don't have PPA. They've got a large position in their cash because they're just waiting for an opportunity to arise, and they can go in there, literally pay cash, and get either mining machines or facilities at maybe opportunistic prices. But yeah, so 10-11 days time the difficulty will adjust. But 16.5, yes, it might not go there, but it does look initially now that we could see another rise in the difficulty rate. This is not what the miners are expecting, because if that difficulty rate goes up, it means all the miners who aren't growing their hash rate, and we'll come on to that in a second, are actually getting less Bitcoin rewards because the pot is bigger to share out. There's more miners on the network. Everyone's going to get a piece of the pie. And in simplistic terms, if you've got miners on the network and you've got a proportion, if you've got 1% of the whole of the miners on the network, and look at Marathon at say 30 exahash, they've probably got close to 5% of the whole network. Now, not taking account of transaction fees or pool fees or anything like that, if you look at it simplistically, Marathon should be obtaining about 5% of the total rewards of Bitcoin that's mined every month. That's how it works. It's not a case of you're mining harder than the next person. No, every machine on the network has a hash rate, and that total hash rate entitles each company to receive rewards based on the hash rate they are providing to the network at any one time. And they all have contracts with these pools to determine what that looks like. And there are some sort of like, differences. Some might, determine what the pool receives. So if the pool is like, some of these big pools are like 30% of the network, you'd expect if they get, that magic number every 10 minutes, they will get expected to get 30%. Now, it might be 31%, it might be 29%, but in general, it should be around about 30%. So the pool might offer you a share of what they physically receive. Alternatively, these mining companies can go to the pool and say, we want to realistically know what we're going to get every month. So if we give you 5% of the network, we want to make sure that we get, say, 4.9% back in terms of rewards, and the 1%, 0.1%, is we're de-risking our position. So, you know, if say 5.1% of fees came in, we're only still going to get our 4.9, and you've benefited by the difference. But we're you know, if you want a fixed amount coming in every month based on your hash rate, so you know up front, if we put these miners on the network, we're going to get paid this amount, then you'll probably get slightly less than you would get if you went for the let's wait and see. If we're looking this month, and luck does play a factor, it's probably a factor of about 2%. It's a bit like the lottery. So, you know, on a smaller scale, but, you know, not everybody's going to win the lottery. But if you said how many states in America are there? There's 50 states. How many counties in the UK? There's 26 counties. And if you had a lottery in each of those countries, you know, how long would it be before every state received a winner of the lottery? That sort of, using that sort of analogy. And the same with the miners. You know, if you buy enough lottery tickets, you're going to win some prizes, you know. And so these miners, you know, if you're in a pool with 30% of the whole network, you're going to get 30% of the rewards effectively, because that's how it works.
At least over time, right?
Yeah.
Yeah, and I appreciate you going into that, Anthony, especially around the pools, because we don't talk about that a ton on the channel. So we're going to now transition into the individual miner growth targets. But before we do, you guys, I wanted to just dull this down a little bit in case maybe you're new to the channel or some of this is going over your head. Essentially how this is all interconnected. Satoshi, in his wisdom, when he created Bitcoin, he basically said, okay, every 10 minutes, we're going to release a block reward. It's going to go to whoever finds this number or string of numbers. And basically everyone in the world is competing, like you said, in that lottery system, Anthony. So the way I kind of think about this is, imagine there's a bunch of guys shooting at a basketball hoop. And every 10 minutes, it's expected that one of these people is going to make a basket. Okay. The person who makes the basket obviously wins the prize, if you think of a county fair or something like that. Now, as more and more miners come on the network, it's essentially more and more people shooting at this hoop. So what's going to happen is your chances of making that ball are going to go down, and the time it takes for someone to score is also going to go down. So now maybe it's only 8 or 9 minutes for someone to score a basket. So what happens is the difficulty of the game changes. So in the basketball analogy, think of the net being moved farther away from the group of people. In actuality, you guys, on the Bitcoin blockchain, how they do this is the amount of digits in that solution number. So they'll actually change the number of digits in that winning code or number, and that will adjust the time or the difficulty for these miners. So when we talk about, okay, there's new rigs being ordered, how does that impact the rest of this? Well, they come on the network. It increases difficulty. That brings down the block time. Then the difficulty has to go up. So for the remaining miners on the network, it becomes more challenging. So I just wanted to kind of paint that picture. Anthony, I hope all of that's accurate, but I wanted to just dull it down a little bit, because when we start talking about global hash rate and difficulty and adjustment times and block rewards, it can get a little bit daunting, hey?
Absolutely. Good analogy.
There you go. I'm not a big basketball player, but I thought maybe a little more relevant than hockey. So anyways, Anthony, now let's move into the individual miners. So this is really interesting. I'll give Anthony full credit for this idea. So what's been happening is we've been seeing more and more companies come out with these aggressive exahash targets. Now, it's all great and rosy when this is announced, same as the purchase order agreements or the options on the mining rigs. But Anthony and I have been sitting here saying at some point, maybe not, maybe they all achieve these goals, but generally thinking at some point, somebody is going to miss one of these goals. Who is going to be the first to do that? So we thought it would be interesting in today's episode to put together a table basically showing where these companies were at the start of the year, where they're at in April, and where they're supposed to be at the end of the year. We've also brought a graph showing those percentages as well, which we'll throw up on the screen. But a really interesting picture here, Anthony, because we've got companies that we cover that literally are forecasting 0% growth all the way up to IREN, which is up near 400% growth for the year. So literally anything under the sun. And that's why we feel we're seeing such a difference in the valuation. Anthony's been doing really good calculations showing the value of each exahash in these companies, ranging from 25 million up to 180. And we've been saying companies are not being valued equally on their exahash. This is really starting to uncover the why behind that. How confident are investors that these targets are achievable? Will these companies actually come out on top at the end of the year as they've demonstrated? So, Anthony, I'll leave it there. We can get into the first table showing the start of year, April, and end of year. What do you make of these targets? Is this possible? And do you think these companies or some of them have maybe set themselves up for disappointment?
If we go back and look at sort of track record for companies actually achieving growth targets, it's not great, to be honest with you. We go back 2 years ago, so 2022. We had effectively one miner achieve it in 2022. That was CleanSpark. They got to the 6 exahash. They then, at the beginning of 2023, came out with a significant number. I think it was initially, I think it was 22 exahash, which got very quickly changed to 20 exahash, which then got changed to 16 exahash. And then by the end of the year, they'd only got to 10. So although they'd grown by, I think it was by 4 exahash in 2022, they grew by a further 4x, which is no mean feat. It's still a big chunk. But when you set out a target, initially at 2022, and you think Superman, everything's going well, and everything's working for you. The challenge is making sure there's no bottlenecks. So the bottlenecks will be, machine orders. Can you get machine orders through the big players like the Bitmains, the micro BTs, Canans? We've noticed in 2024 there are some new players coming in, but bear in mind most of these companies are using the three big players. In fact, most of them are using the two biggest players, which is Bitmain and micro BT. So that's one bottleneck potential there. The second one is facilities. You've got to have the facilities to put the mining machines in. That's going to be a problem if you can't get hold of facilities. And we know, listening to the likes of Jason Les of Riot Platforms and other CEOs who've come on and said, I think Adam also said, gone are the days where you'll see mining companies say, we've just found a 500 megawatt site out there that we're now building, and have power at really, really cheap energy. They feel it's going to be smaller, smaller sites. So you'll have these companies now not just having 2 or 3 big sites. They'll have maybe a number of smaller sites. Still having to get to this hash rate. The third thing is access to cheap energy. And it's no use having a facility. It's no use having Bitmain saying we can deliver next week if you're paying 7-8 cents a kilowatt hour. These miners now, most of these miners are probably paying on average between 4 and 5 cents a kilowatt hour. We know there's 2 or 3 of them are paying significantly less than that. So we've got the likes of Cipher are paying 2.7. We've got the likes of Riot, who were able to pay 2.2 in 2023 using their energy strategy to alleviate the cost. We know that TeraWulf they're a customer at the nuclear facility at Nautilus, and the energy price there is 2 cents, but the majority of their hash rate is at their Lake Mariner site, and that's more of a market rate. That's close to 4 cents a kilowatt hour, so they have a blended rate to cover the whole hash rate. Still about 3.5 cents when they were last updating. So again, still a great power rate. If you can get your power rate in that sort of ballpark, you're doing something well. IREN as well at the Childress site are able to mine very, very cheaply using a similar strategy to Riot Platforms. And, they have a really, really low power rate in Texas. And what that's doing is it's sort of bringing their overall power rate that they operate some of their sites in Canada. And so it's bringing that down as well. So a lot of these miners are paying that, so you wouldn't see them paying, anything north of 7 cents. The ones that are paying close to 7 are the ones that are hosted. So there's a hosting fee as well as a power fee. And we know that Marathon, before they started buying their sites in recent months, because it's only this year they started really buying sites, and the likes of Bit Digital, who host 100% of their businesses in a number of locations, they're paying probably about 2 cents additional to the power cost as a hosting fee. And actually, there are some, there are some benefits to doing. You don't have all the hassle factor if you're hosting. You don't need all the employees. You're paying a fee. And actually, I think we've had Rob Chang on from Gryphon Mining. They're another one that host all their fleet. There's 3 employees in the company. That's not too bad when it comes to paying the salaries at the end of the month. You've got to do 3 for payroll. That's you don't need one of these companies. I mean. Riot's probably getting 300-400 employees at the moment, maybe even more if you include the contractors currently building the Corsicana site. And I would imagine IREN are also at Childress are having a significant number of contractors in there, because that growth target they've got till the end of the year means that they're going to have people literally working 24/7 around the clock to get things really, really in time for that growth target there. So those 3 factors are really important.
Yeah, it's funny you bring those up. Sam Tabar talks about the holy trinity of HPC AI. The holy trinity of Bitcoin mining is the machines, obviously the place to put the machines, and then the power to run the machines, right? And I wanted to make a point there, Anthony, when you're talking about the facilities, because we're starting to hear from more and more CEOs, there just aren't a lot of these locations around. And I heard on a Spaces meeting the other night, Anthony, you were talking about Riot in comparison to some of these other miners. I think a lot of people in this space don't understand how rare Corsicana is. That's literally a once in a lifetime location that Riot and Jason had an opportunity to take and did. I don't think we're ever going to see another gigawatt site, at least with these type of power economics and Bitcoin mining activity, things like that going on at that location. So a lot of people talk about Riot and they talk about their growth, but keep in mind, you guys, growth at a single location is much easier to control, to manage, to monitor. You talk about management costs and supervision costs, Anthony. So I think a lot of people, especially people new to this sector, they don't understand the value of that single site. And Corsicana, we're going to be down there in 2 weeks, Anthony, and see it firsthand for ourselves. We're going to be doing some filming there as well. But I just wanted to throw that in there because we talk about not all exahash created equal. Well, not all data centers are equal as well. And Corsicana is really going to be something special, I think, for Riot.
And not forgetting, Corsicana is going to be 100% immersion cooling. So, not only is it going to be the biggest site in the world, it's going to be fully immersion cooled site. So, maybe they'll be able to, if they've got the right secret sauce this time, then we will see some potential in actual maybe more Bitcoin being mined if they're able to overclock, or a reduction in energy costs if they're able to underclock and they're not utilizing as much power with immersion cooling, because there's a lot of features on a miner that you don't need. You don't need fans, and they take up energy. So a lot of things get taken away from a mining rig that's going into immersion cooling, and therefore there's less power. You can do far more with it. I spoke to mining companies who use immersion cooling, and they can say anything up to 50%, sometimes even greater than that, above what it says on the box for these mining machines. So really looking forward to going to Corsicana and understanding more about it firsthand, rather than reading it in books and online and things like that, which I've spent the last 4 years trying to build up my knowledge base. But we're also going to, visit the flagship site for Core Scientific as well, and it'd be great to meet the team there and get more of an understanding of where they're going, and bear in mind that the last sort of 18 months they've had and what they've come through to get to where they are. So yeah, that's some good things happening in the next couple of weeks.
Most definitely. Now, to bring it back to the tables here, Anthony, I'll switch over to the next graph that talks about the percentages, because we obviously, it's too early in the year to understand at this point who will be successful or not, but there are going to be some milestone achievements. For example, I know Bitfarms, they've got an aggressive growth target. It's in South America, so there's some contention there. But they've basically come out and said by June, they're going to be at 12 exahash. So a lot of these companies have set kind of midpoint milestones or quarterly milestones. So Anthony, when is going to be really kind of the make or break? Do you think if we start seeing these companies fall behind right out of the gates, the market's going to start adjusting the share price? Or do you think it's going to be a case similar to kind of with CleanSpark there of 30 exahash is really a stretch target. This is what we heard from Gryphon as well. 10 exahash is a 10x growth. That's a stretch target. Even if we get to 8 or 9, we're going to be very, very happy with that. How do you think the market's going to value this between those 2 points, Anthony?
Yeah, I mean, just firstly, going off the actual increases in hash rate, I've taken this from actual physical updates and presentation packs. So with the likes of Gryphon, we've had Rob on the podcast, and he said, when we asked him what your target was, he said 10 exahash, but I haven't seen anything in the presentations yet. So I've just left their hash rate as it is at the moment. We know, having spoken to Soluna, having spoke to SATO technology in recent weeks, that self-mining growth might not be as quick as everyone would like it to see, but they will look at opportunities when it happens. So, and they're not much smaller in terms of hash rate size or self-mining hash rate size than Gryphon, and so they're being a little bit, be a little bit more optimistic of like what they could achieve. So I'll leave Gryphon at where it is at the moment until we get something in writing to say it's physically going to this far. And even Rob said in the same sentence, he said, I think if we get to 6, we'll be really, really pleased. So, 10 is a sort of a stretch target for them. I'm not saying they're not going to increase, because, he's getting a significant amount of calls during the day now looking at opportunities. So they might be able to put some opportunities together where, Gryphon merges with other companies of a similar size, and you see hash rate growth. And I mean, just look at the growth in hash rate when US BTC and Hut 8 joined together. The size of the hosting and management services that the old Hut got as part of that deal is quite significant.
And
But we're
Anthony,
talking
just
about
like Riot, I'll throw in there, you guys. I believe they have 1.1 gigawatts under management or something like that for Hut 8 Corp, you guys. Another
yeah.
one that a lot of people, they just don't value that power infrastructure. You just are not able to go out and buy a gigawatt of energy in the States anymore. So
No.
another one that I think a lot of people just don't value that component.
It's just, yeah, and we had this conversation about valuations. It's just the market is still in its infancy, effectively. Not been around too long. Only 6 of these miners were around sort of 5 or 6 years ago. So a lot of new miners on here, and a lot of understanding from the market. But at the same time, I think we talked quite a lot about this yesterday. So we're not going to repeat that there. But in terms of the growth, the challenges will be now is when we get to June and we find out who's going to start failing at the first hurdle. So there are some positive signs. I mean, IREN already achieved their mid-year target, and we're in May, so they're sort of like 6-7 weeks ahead. But then they went out and decided to add another 10 exahash to their target for 2024, and that blew everyone's mind out of the way. And it also woke the market up a little bit, because they were sort of really operating before that announcement. They were operating at book value. And for those of you that, again, it's another accounting term. For everyone that doesn't understand what that term means, it means that for every pound invested in IREN at the time, you were getting a pound of assets. So you'd have to invest, I think, something like £4 into Marathon Digital to get $4 to get $1 of assets. That's the difference in terms of price to book. So the 6 monthly part here, quite a few of these miners have got mid-year targets to achieve. So we know that, going through the list there, we know that you've already articulated Bitfarms have got to get to 12, or they're at 7 at the moment. That's 5 exahash. That's like saying we're going to grow Hive Digital in the next 5 weeks. Hive are the oldest miner. They've been around for 6-7 years. I'm not saying it can't be done. It's just going to be, if they pull it off, then everything's going, rosy for Bitfarms, and they'll get there at the end of the year. But any slight delay, and I don't care if it's like they'll be on in September, that to me is a delay, and they haven't achieved it. And it's a case of who's going to be the first mining company to go out and say, we've got an issue. Houston, there is a problem. And so Bitfarms got to get to 12. Going through the list there, CleanSpark, they're at 17.3. They've got to get to 20. I think they'll get to 20 by middle of the year, because we know they had a few difficulties towards the end of last year with sites and machines, with part of deals that they've made. But they they achieved it in February, so we give them a little bit of a little bit of a pass on a detention for them going into 2024. They got to 16 exahash, then they've gone to 17.3 exahash. I think they'll get to 20, by the end of June. 32 by the end of the year, I think is a challenge, not from a machine perspective, but I think one of the bottlenecks they've got is the infrastructure. Yes, they are looking around and buying infrastructure, and they may well be able to buy sites by the end of the year. The question will those sites be ready to take mining machines, or will there have to be work done to those sites to get them in a place where they're ready to plug in and energize? Because these hash rate targets are for energized hash rates. These aren't sort of like, well, we've got the machines in a garage somewhere, so of course our hash rate's at 30 exahash. No. When you put the targets for growth out there, retail investors and some institutional investors will expect you to deliver on that. And so I think they have a little bit of a challenge. I'm not saying they're not going to do it, but I think there are companies that have probably got a chance ahead of them that could do it, that don't have that bottleneck. Core Scientific, they've got a small target. Their growth target at the end of the year is 21.8. They're only just over 1 exahash short of that. So I've got no doubt that they will be able to achieve theirs. They've already got the site that they're expanding by a further 72 megawatts, and that will give them between 2 and 3 extra exahash in terms of compute power that can go into that expansion facility there. So I don't see that being a problem at all. Very manageable. DMG, again, we're starting to see the S21s being delivered. So they ordered 4.5 and 4,550, I think it was exactly there. So S21 machines. So they'll get installed this year. They've been expanding their site, and they've got a target of 1.7. So I expect them to get to that. We should start seeing that number at the moment start creeping up now, because the orders, according to their updates, are coming in on a regular basis. Hive Digital, they've set themselves a target at the start of the year of 8. They were at the start of the year, they were 4. End of the year, 8. They're at 5 now, so they need to pull the socks up and get those orders in. I believe in the next few weeks, they'll be getting more orders in to get to 5.5. So the last half of the year, 2.5, it is achievable. But again, if you look at the size of, Hive is not CleanSpark in terms of growth. So, it's still, Hive has still got to achieve, a significant growth to get to where they're going to be. Not quite double, but not far short of that by the end of the year where they are at the moment. We haven't had anything for HUT coming through. So HUT, I'm afraid, at, I've left it at 0 there. They are growing their other side of the businesses. So they're looking at the managed services, the hosting, and that side of the business. Looks like they're growing that there, but we've not seen any machine orders from HUT for, I'm going to say, best part of 3 years at least. So, we look forward to seeing those orders come through, because I'm assuming their fleet efficiency is probably one of the lowest in terms of all the miners I look at. It's got to be, I think it's just over 32 at the moment. And when you consider 4 or 5 of these mining companies are now at 24, that means they're mining Bitcoin significantly less in cost than HUT. So, it does make a difference. You need to have the best machines in place. We've talked about IREN extensively. They're at 10 at the moment. At the end of April, they're at 9.4, so hence the table says 9.4 there. But they went to 10 in May, so that's at least 6-7 weeks ahead of plan there. They've got a big chunk to get through between now and the end of the year, but it's all on one site. And actually, the great thing about IREN is they post pictures quite regularly of how they're building that facility up there. So we saw when they had the first building completed, which gave them an extra 20 megawatts. And slowly but surely, each 20 megawatt building was completed in sort of like each month we'll see another building come online. So they're going to have to speed up that sort of growth, because they need to effectively grow the company, 2 times what it currently is at the moment, and it's taken them a few years to get to 10 exahash. So, it's on one site. They've got a couple of substations to apply as well, but the power's in place. They've learnt lessons from the first amount of facilities they built at Childress. So that lessons learned will help them do things, far more quicker going forward. So, there is a learning curve in any type of industry whereby, when you do it the first time, it takes a bit of time, and every time you constantly after that you drop the time, and it is it's a true management theory. I studied it when I was becoming an accountant, so I expect them to certainly get close, because we'll see quite quickly on one site how quick that site's growing. Marathon, they're buying sites, and Fred Thiel says by the end of the year he's expecting, and if you use his percentage, he's going to have between 40 and 45 exahash in facilities that are owned by Marathon themselves. So they're going out buying more infrastructure. They won't be able to get enough infrastructure for the 100% because they've probably got contracts at certain locations for hosting, but they'll have about 85% of their fleet in owned facilities. So that's a whole 180-degree turnaround from where they were back in 2022, when Fred was the asset-light king of Bitcoin mining, and no other strategy would even come across his desk to be considered. It was like, we're spending all our money in mining machines. Now they're buying the facilities because they realize the control issue is something they need to have. And if you look at production, when you're being hosted, those companies don't tend to do as well as the ones that look after their own. And we've used the analogy, you go to a hotel, you treat it the same way as you treat your own home. You drive a hire car, you drive the hire cars like you drive your own car. And I think on both of those issues, most people say probably not. So 20 exahash between now and the end of the year, I still think that's a challenge for even the size of Marathon. Bear in mind, it took them 12 months longer to achieve their 23 exahash than they had it planned for. So they could come up short this year. Moving to Riot 2024, we said yesterday, is make or break year for Riot, because they've had some real issues for the last 15, 16 months at their Rockdale facility, starting with the weather issues, the storm damage that affected both their immersion cooling facilities in January or December of 2022, and only just came back online towards the end of 2023. So they've actually got Rockdale facility up and running now. Now they've announced, obviously, there was a lot of miners in that facility that weren't operating anywhere near, so they're going about replacing those. They're building out this Corsicana site, so the majority of their increase in exahash is at Corsicana. So we're going out there in literally 3 weeks' time to look at that site there, and we'll have a first-hand view, and we'll be able to speak to people and see what they've done in the time frame. Bear in mind, Riot started breaking ground on Corsicana 2 years ago, and they've just literally got the first big facility up and running and energized. So they've got to get a lot more of those facilities up and running, probably 4 or 5 similar sized buildings up and running by the end of the year. Can they do it? It's going to be a challenge, but it's on one site again. So again, the lessons learned from the first building should transfer to the second, third, fourth, and fifth buildings on that site there. And so I'd expect them to get closer. Plus, if you need to bring extra staff in to get things done, they've got the ability to do that on one site. You can manage things a lot easier on one site. So I'd expect the likes of IREN, the likes of Riot, to really ramp up people if they're falling short of their growth targets, to get them in place there and get that building done, because the market expects. The next two, SATO and Soluna, haven't really given any targets on terms of growth, other than with Soluna Holdings, they're looking at projects, and they've just announced they've got the capital now for Dorothy 2, which is one of their big projects there. About 35 million they've partnered with a company there, so that will start doing some nice revenues. But from a self-mining perspective, at the moment, it's going to be opportunistic. So it might be, as some of these revenues from the new projects come through to the business and they're getting a decent margin, some of those margins can be invested into self-mining. They're not taking the foot off the gas on self-mining. They've got about 0.8 exahash of that. They've got a significantly bigger hosting business at the moment, probably twice the size of their self-mining business. And so they're growing organically. And they've got sort of like, certainly 2 projects on the tables. They've got Project Dorothy 2 and Project Catty, and or Katie, and there's projects down the line as well that they're starting to put out now. So they're going to do things piecemeal, put together a project, and then look to get a partner for that project to help with the capital costs. They can then sort of like manage and deliver it, and everyone wins on the project going forward. So, in 4 or 5 years' time, if they continue to do this with small projects, bear in mind, I've got to mention, they've got access to power under 3 cents. So they can compete with the Cipher Minings of this world in terms of that. And it's a win for them, and it's a win for the hosted clients, because if they can put a premium on the hosting fee, the clients aren't that bothered because they're paying cheap energy. So they can afford, if Marathon are paying 4.5 cents a kilowatt hour, or close to five cents for their energy, and they have to pay a hosting fee on top, and Soluna's clients are getting the energy for under 3 cents, you can see that there's a nice margin there for Soluna to achieve. And the hosted company also do well because they have a cheap cost. They're not paying 6.5 cents like maybe some of the likes of Marathon and the likes of Bit Digital having to pay. They might be paying 5.5 cents and getting a great deal out of it as a hosted client. So that's a good thing for them.
And Anthony, before we get into the Wolfpack and TeraWulf, Dorothy and Katie are not John's ex-girlfriends. Those are actually famous female scientists from past years. So I did ask John about that, and I just wanted to set the record straight for you, Anthony. Now let's get into the Wolfpack.
Thanks for setting the record straight. It's fine. So finally, we've got the Wolfpack. So TeraWulf, they've got a current. They've grown their hash rate exactly as they expected to. So they've got to 8 exahash now. They've got a plan in the next 6 weeks to get to 10 exahash. So again, 30th of June. Watch that date there. We'll get the update probably the first week of July. Hopefully, they'll get to the 10 exahash. And bear in mind, when these companies hit a milestone target, we don't normally wait for the monthly update. They normally get that advertised out through a separate update. Let the whole world know when they've achieved a milestone target like 10. And if you remember back 6 months ago when we started doing this, Bryce, we sort of said once these companies get to 10 is top tier. And I think now 20 is probably top tier. Going forward, because too many of the miners are going to get to 10. So we need to have separate divisions, and so.
We need to adjust our difficulty, Anthony. Just like the Bitcoin network guys.
Yeah, we'll have analysis difficulty. So, so they're not stopping at 10. They've got potential to do a number of things. They can still expand at Lake Mariner. They've got access to a lot of energy there. I believe it's their energy as well. So they're the one of the few miners that's fully integrated, vertically integrated. So they control literally every element of the process. And if you delve deeper into the balance sheet, they probably have a lot of management over some of the issues that people have got concerns about as well. If you think long and hard about what I'm trying to say, you'll understand. So TeraWulf have got a target of about 13.1 for the end of the year. They've also got potentially the opportunity, and I know you touched on this with Paul in the last podcast, about maybe expanding into the Nautilus site there. They did sort of have an agreement to go to 100 megawatts there. They're at 50 at the moment, 2 cents a kilowatt hour. So if they can get 100 there at 2 cents, that brings their overall stranded energy costs down again. That probably brings them closer to 3 cents. And that puts them energy-wise as a top player. And when you think about the next 116 years of Bitcoin mining, the biggest cost a miner faces is energy. Forget mining machines, forget facilities, it's energy, because that energy cost is going to double every 4 years. So having cheap energy, I mean, at some point in time, Bryce, they're going to have effectively free energy, because it's going to get beyond where miners won't be able to deliver unless the transaction fees start having to be increased to cover that. So if we get more transactions on the blockchain and therefore more fees generated, then that keeps miners busy. But once it gets to a stage where the profits aren't really there, you can see, you'll see some of these public miners having to say, let's focus on another service, and we'll cover we've covered enough of HPC recently, but we'll probably do maybe a separate podcast in a few weeks on HPC alone and look at all the sort of like intricacies of what's available for miners there. And have they got a future in HPC? Because I could see this week, maybe, I mean, we heard it from Sam. Sam's very vocal on the fact that, he knows what he's getting with HPC. He doesn't know what he's getting with Bitcoin mining. And he said, look, I'll split the business out. and run HPC separately, because the market aren't giving me any credibility for my 50 million per year, which is going to ramp up to 100 million, by the way. So that's going to be best part of a 3-year contract where they will have achieved 250 million in revenues from a contract. And we know that the margins are between 60 and 70%. So that's guaranteed. That's what institutions want to know, is what's your revenues coming in over the next 3 years. And those that have got HPC contracts with clients can sit down and say, that's our revenue, that's our contract, and that's what we're going to be. None of the miners can say that with Bitcoin mining, because we don't know what's going to happen. I mean, the difficulty went up this week, and it's going to, potentially it's going to go up again. And all these people beforehand were saying it's going to drop. It makes sense that it should drop. It should drop with the fees getting down, but perhaps as people are still being able to make a bit of a profit, bit of a contribution, and keeping machines online, or they're just pure gambling, just waiting for the Bitcoin price. Because if the Bitcoin price rallies, and we've seen it pull back a little bit today, it was down in the dumps yesterday a little bit, but we've had a good run for a few weeks. It's been good. We got to the stage where we were equalizing what March finished at, $71,000. So we were getting to that sort of level, and that was hopeful then, because we need it to be above 71,000 at the end of June. And that's because miners will release their Q2s. Those with a hodl need it to be above 71,000 to sort of not have any unrealized losses for the last quarter on their books. So we want it to be above 71,000 for them, and actually 71,000 for everybody, because those miners are selling on a daily basis want to get the maximum amount of revenues on a daily basis as well. So I hope that sort of covered the growth strategy in a sort of like 50-minute segment.
I think it did. We'll call this one a power hour as well, Anthony. There's a lot to go through, but we wanted to break it down for each company, you guys. And as always, remember, this is only a single growth metric towards their hash rate. So nothing to do with HPC, nothing to do with debt or any of these other metrics, energy prices that we look at with these companies. And it is interesting, Anthony, now that we've had more time with these CEOs and we're seeing the landscape evolve, you definitely are seeing that division between kind of the energy infrastructure focus, the HPC AI focus, the pure mining focus. Then you've got the differences in the HODL strategy, the infrastructure light versus vertically integrated. So within this group of companies that we cover, it's almost like a menu. You can kind of pick and choose. If you're a Bitcoin maxi, maybe you go to the pure play miners. If you really think AI is coming down the pipe, you can pick and choose which you like. And that's why I like this space so much. But I do agree, Anthony, that 2-3 years from now, it may look very different, and some of these companies may not be in one or two of these verticals anymore. So we'll have to continue to kind of adapt and grow alongside them. But very astute information today. Great graphics, Anthony. I know these take a long time to put together, so thanks very much, guys. Feel free to pause, take a look at any point. If you're still watching, obviously, we put a lot of time into these videos, so please hit the like button, you guys. Subscribe to the channel. And if you have specific questions around these companies or growth strategies, leave them in the comment section below. We're more than happy to get to those. Anthony, thanks so much for the time. I'll give you the last word here, and we'll see you guys tomorrow.
Yeah, just a point to people watching the video there. If you've got any sort of podcasts that you want to like us to do in the next few weeks on a subject within Bitcoin mining, then put it in the comments there, and we'll certainly try to cover as many of the topics as we can. We try and give a broad education of the space, and obviously using the miners to articulate that. So but yeah, if there's something that you'd like to hear more about, maybe it's something that we can accommodate. And certainly if there's a big interest in a topic, we try and pick out the topics that people want to hear about. And hash rate is always a good indicator. I mean, we're always happy when we see an update from a big mining company saying they're going to grow. And we've had some big updates in the last 6 months, massive updates. I mean, I go back to when I started this, 3-4 years ago, and if you got to 2x hash, you were a big player. Now, 2 doesn't really cut it anymore. It's, we're looking at 20, 30, 40, 50 exahash by the end of the year for some of these miners. And, the race is on to see who'll get there. Who's going to blink first? We've got Ben on the channel on Monday. So Ben's going to get, quite a few questions to make sure that we're coming up with that target in June. And it was on plan. But the last time I spoke to Ben was a month ago in London, and very, very happy with the way things are progressing there at the company and the sites that they're going to be building and growing machines on. They've got all the orders in place, so it's not a machine for them bottleneck. It's facilities. They've got the power in place as well, so they're operating in locations where they've got good power. And then obviously early next week we've got Dan Roberts. So if you look at two of the miners that we've been talking about last couple of days in terms of their growth, we're going to have two of the experts on next week. So again, if you've got questions for Dan, if you've got questions for Ben, put them in the comments, DM me, whatever, and we'll try and ask as many questions. When we have these CEOs and these officers of the companies on the podcast, we ask, all the time we ask you guys for the questions as well, and we'll put probably 60-70% of your questions, on that podcast. This is not about, the Anthony and Bryce, let's just ask what we want to ask. We do open it up for everybody as well. We're just a platform where we can get these people on the show, and they'll come on the show. They're happy to come on the show. We've had Bryce, I don't know how many have we had this year already in terms of CEOs and officers of the company?
We counted them last night, Anthony. I think we're close to around 60 podcasts, with just over half of those. We just got through Q1 earnings, you guys, so it's been a very busy week in terms of interviews. We also booked in Hive for the start of July as well.
Yeah.
And then we're through all those. But it's a great time, like you say, Anthony, to talk about some other topics. We really encourage you guys to write in about those, and we'd be more than happy to pick them up. But yeah, we've, I think, done 32 interviews, Anthony.
Excellent. Excellent.
Great,
Cool.
you guys. Well, thanks so much. We'll see you Monday with Ben and the Bitfarms team. We'll be talking growth, and of course, we'll be talking the new CEO update. I know that's burning on a lot of people's minds as well. Looks like a green day in the market, you guys. Hopefully you're making some money. Go have a fun weekend. We'll see you here Monday.